All right, let's go, y'all. All right, so today we are on day 3. Today we are on day 3. We have talked about candlesticks now. We talked about trends, highs and lows. So now today we are going to preview what trends are in highs and lows. And the new topic is going to be break of structure. So y'all all know, or if you watched the previous video, y'all know what trends are whenever trends happen. Now I'm going to teach y'all how to know when it's time for a reversal, when price breaks structure to the upside or break structure to the downside, and what to look for in order to identify whenever market is doing these breaks and reversals, right? So without further ado, let's get into it. For starters, we're gonna go over like I said, we're gonna preview what we talked about last time, which was the highs and the lows, right? So I mean, not the highs and lows, I'm sorry. The highs and the lows, right? In uptrends and downtrends. So off the rip, I explained to you guys last time that a high is basically a move up then a move down, right? A high is when price move up then move down, and a low is the opposite, is when price move down and then move up. So if you watched my video last time, then you already know this, right? But this is what a high will look like. This is what a low will look like, right? So y'all know when we talked about the candlesticks, a move up will be a green candle and a move down will be a red candle. So a high is simply a green candle, then a red candle. This how you see right here. At this point, this will literally be considered a high. A green candle, then a red candle. A move up, then a move down. Then the highest point will be right here, the wick of whichever candle is the longest to the upside, if we're speaking on highs, right? The same for this point right here, a green candle, then a red candle. This would be a high. These are random highs. These are small highs, but this is just to show you guys that it is literally highs and lows all over the chart, right? Today, we're going to get into swing highs and swing lows, but just know that it's literally highs and lows all over the chart, right? These are all highs and lows. Literally, do not overcomplicate that. A move up, then a move down is a high. Just like this point right here, we have a green candle, then a red candle. This will be a high. What is it? It's a move up, then move down. Simply. That's all what a high is, right? And a low is the opposite. Like I told y'all, it's a move down, then a move up, right? As we learned with the candlesticks, a move down will be a red candle. A move up will be a green candle. So simply, you can name any low on this chart. You will probably be correct if all you are doing is pointing out whenever you see a red candle, then a green candle, because that will be considered a low, right? This is a red candle, then a green candle. This is a low, right? This is a red candle, then a green candle. This is a low, right? This is a red candle, then a green candle. A move down, then move up. This is a low. These are small lows, but they are lows. I'm sorry, I circled 3 candles, but I was only trying to circle this red candle and that green candle, right? So that is what highs and lows are. That is simply what highs and lows are. Keep it simple, right? And to get the breakdown for the people who may not have watched my other videos, whenever we are looking at these highs and lows, say for instance, this is a low right here. Why is this a low? Because it's a move down, then a move up. It's a red candle, then a green candle. Simply what a low is, right? So let me zoom in for y'all. But, oh crap. But, so since we already identified that this is a low, simply because it's a red candle, then a green candle, it's a move down, then a move up. Now, a lot of people will get confused on which point is the lowest point. So we are talking about lows. So when we are speaking on lows, the lowest point is going to be whichever wick move further downwards, right? When we're speaking on lows. So in this situation, this red candle and green candle, this is a low altogether, but this is the lowest point of that low, right? Because this wick is longer than this wick to the downside. When we speaking on lows, we don't care about the wicks to the upside. We only care about the wicks to the upside, trying to identify the highest point when we're speaking on highs. But right now we're speaking on lows. So when we're speaking on lows, the lowest point will be the lowest wick of those two candles, right? So the same for all these other candles that I identify for you guys. This is a red candle, then a green candle, which is a low, right? Which will be the low point for this low, the lowest point for this low. Correct. It will be right here, right? This is the low for this full low. This is the lowest point for these two candles, right? This is the low for this low, the lowest point of this low, right? So just remember that whenever we're speaking on lows, the lowest point will be whichever wick went the lowest. This is the lowest point of that low. And we can even go into another one. Say these candles, they are equal with each other. This is a move down, then a move up. Red candle, then the green candle. So this red candle will be that low, right? So just how we say it's a move down, then a move up. The low point will be right here. This is what makes that low, right? This is what makes that low. This is what makes that low, right? We had a move down, then a move up. This is what made that low, right? I hope this is making sense to y'all. We had a move down, then a move up. This is what made that low, right? This is the low point when price has to move down and move up to get that bounce to actually make that low, right? So just remember that whenever we're talking about lows, and we can do the same for highs so that y'all not confused. Whenever it's highs, move up, then they move down, right? We have a move up, then a move down. So this will be that highest point now. Since we're talking about highs, a move up, then a move down, this will be that highest point, right? We have another move up, then move down. This red candle of these two candles will be that highest point. This move up, then move down. When we're talking about highs, we no longer care about the wicks to the downside. We only care about those when we're speaking on lows, right? So another example where we have a move up, then move down, right? This will be that highest point right here. This will be that highest point right here. And then again, we have a move. Look, we have a move up, then a move down. This would be that highest point. This is what makes that high, right? Price has to move up, makes that up movement, and then move down, and then it can make that high, just like you see right here. Just like you see with these move up, then move down. Price makes that high whenever it leaves that wick right there, right? So I'm breaking this down because this just shows you, boom, just say we're trying to identify a high, right? This green candle just couldn't be a high because all it is moving up. Like, it doesn't have a point. All it did was move up. It doesn't have a point where it bounced off. It doesn't have a specific high. It's just a move up, literally. Just as the same with this big red candle. This candle itself does not make up a low, right? Because the candle just moves downward. It's just a downward movement, right? It makes up a low. Price actually makes up a low when it have this down movement, right? And then price comes back up. That is when we get these lows, right? This is now considered a low, a move up, then move down. You need that move down, then move up to have that low. You need that move up, then move down to actually have that high. Because if you don't have it, if it's not like this, now it's just a move up, or now it's just a move down. It does not have a key level. It does not have a point to make it that high or make it that low. So remember that. I hope that made sense. And if you're gonna draw notes, just draw the notes. If you making notes, bro, just the shit that I draw on the screen. The shit that I draw on the screen, bro. The shit that I draw on the screen, bro. Just write that down in your notes. You know what I'm saying? Just write that down in your notes. All right, my bad. But yeah, whatever I'm drawing on the board, just write the same exact shit down in y'all notes. All right, but I'm gonna try to get more details so that the stuff that I do draw down that y'all can actually write it down. But like I said, what I just talked about, that was really just a preview. We already went over highs and lows. We already went over highs and lows in the previous videos. We just doing a little preview for the people who may not have watched those videos. But all right, now I just identified to you guys what highs and lows were, right? A low is simply just a move down, then a move up. A red candle, then a green candle, right? And a high is simply just a move up, then a move down. A green candle, then a red candle. Those are highs. Those are highs. Those are lows, right? Remember that. Now that we know what highs and lows are, now we could get into these trends and just get a little preview on these trends. So, when we're talking about a downtrend, because when we're talking about a downtrend, that means price is moving in lower lows and lower highs. Sellers are in control. Oh shit. Sellers are in control, right? Downtrend, price is moving in lower lows and lower highs. Sellers are in control. So what does this mean, Tay? I just told y'all what highs and lows were, right? So now in this chart, we're going to identify, specifically for this trend right here. And let me circle it for y'all so y'all not in confusion with what we're looking at. So we're going to look at this downtrend, which is right here. This big downtrend right here. We're going to be looking at right now, right? So I just want to show y'all why this is a downtrend and how is price moving in lower lows and lower highs, right? So if you remember what I just taught y'all a few seconds ago, we would know that move up, move down, this is a high. Move up, move down, this is another high. This is technically a high as well. And this is another thing we're going to go into today. But we're just going to focus on this high right here. A move up, then move down, right? And again, a move up, then move down, right? These are all highs that we just marked out. And just for lows, the same thing we're going to mark out is move down, move up. Red candle, green candle. Move down, move up. That's a low. Move down, move up. That's a low. And again, move down, move up. That is a low. So, us just marking out these lows and highs, this is us marking out the downtrend, right? This is a high. This is a lower high. I will even put it in the arrow for you guys. But let me start off as the lows, right? This is a low. This is a move down. Oh, crap. Move down. And move up. All right. And we're going to have another move down, which is a lower low. It's lower than this low. And after that lower low, what we get? A lower high. It's lower than this high. Then we get a lower low. Then we get a lower high. And again, it just continues. This is what continuation looks like. This is what continuation looks like. Right? So, At this point, we got highs, lower high, lower high, lower high. We have a low, move down, then move up. Lower low, lower low, and lower low. And even a lower low right here. So a downtrend is price moving in lower lows and lower highs. Just how we just identified. So literally, just like this is a perfect downtrend, what a downtrend will look like, right? So boom. Now we know what a downtrend will look like. And, you know, if you want to draw it out, simply just draw it like this. If you want to draw out what it look like, draw it out like this. Boom, we have a high. Boom, we have a low. We're going to have a high, we're going to have a low. Boom, we'll have a lower high. Then we're going to have a lower low. Then a lower high. Then a lower low. So you could draw this in your notes just like this, and then you can just identify them. So this will be our high. This is so y'all not confused. This will be that high. This would have been that first low that we had, basically at this point. Or even, because that probably was a move up, the green candle. So we could have made the low right here. Right? Move up, then move down. This was made that low. Like, you know what I'm saying? It all play a part, man. It all go together, bro. I hate when they zoom in like that. But, boom. Now we got a what? A lower high. So we're going to say LH. That means lower high. And for this one, what do we get? A lower low. Lower low, lower highs. A downtrend is lower lows and lower highs. Right? Price is steady pushing the market downwards, right? Price come up, then it rejects. Boom. Price comes up and it rejects. Boom. Price come up, then it rejects even lower. This is a downtrend, right? These are downtrends and uptrends. Now we can get into the uptrends. This is a boom. Just like this. This is how it would look like. Boom. Boom. Feel me? High. Lower high. Lower high. Lower high. Low. Lower low. Lower low. This is technically lower low and then lower low. So this is how it moves. This is what a downtrend will look like, right? And then we can go into uptrends as well, just so it's no confusion. Let me get a good uptrend, which is right here. An uptrend is basically the opposite of a downtrend. It's basically the opposite of a downtrend, right? So y'all know how we have these. We have a low right here. We have these lows. Then we have another low. And this actually failed, but this is a low. And then we have another low. And then another low. And not only do we have these lows, but we have a high. Another high. And another high, and another high. So, as you can see, a uptrend is when price is moving upwards, right? So, uptrend is when price is moving in higher highs and higher lows. Simply the opposite of a downtrend. Uptrend is when price is moving in higher highs and higher lows, just as we identified in this example right here, right? So let's delete all of this shit. I'm gonna keep the highs right here. And this actually makes sense whenever I go into the difference between swing highs and swing lows. But this is what an uptrend will look like. We get these a low right here. And we can even, I'm going to type it out for y'all so that we don't have to go all the way through everything. We get a low right here. We get a low right here. We get a high right here. This is going to be our first points for our lows and our highs. Boom. What we get shortly after, we get a higher high. A higher low, which will just be at HL, just like this. Boom, higher low. Then what we get after this higher low, we get a higher high. Boom. And a higher high would just be HH. I'm doing it like this so when y'all see stuff on TikTok and Instagram, when y'all see trading stuff, y'all could understand the terms and stuff like that as well. But yeah, so we have this low right here. We have this higher low. We have a high. We have a higher high. And what do we get right here? We have a higher low. So we just track these higher lows and higher highs. This is how we identify that we are in a uptrend. This is how you identify that you are in a uptrend, because price is going to continue to move in those higher highs and higher lows. Right here, what we have, a higher high. So boom, just like this. This is how a uptrend will move. It will move in higher highs and higher lows, right? The same as how, and you see just how I explained to you guys what a simple high and low is, right? A high will be a green candle, then red candle. You see that every point that I have circled for the high is a what? A green candle, then a red candle first. And the same for the lows. It's a red candle, then a green candle. Move down, then move up. And every single point that I have circled right now, you see that it's a red candle, then a green candle. 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 So this just shows y'all that everything adds up and it all goes together once you put it together. But you know, we just have to learn the basics of everything first. We have to learn what everything is first, and then we have to add it all together. Shit. But yeah, like it all goes together, bro. So please don't overcomplicate it. Like literally right here, this is 100 motherfucking highs and lows right here, bro. Literally, it's highs and lows all over this chart, bro. So don't get it confused, right? But yes, for this uptrend, this is what an uptrend would look like, and I could draw a visual out for you guys for the ones who do want to take notes. For the ones who do want to take notes, we could do the arrows how we did last time. And uptrend would be when price move upwards. We have a high. Let's make us a full high. Boom. And then we have a higher high. Not only do we have a higher high, we have a higher low. Oh, crap. A higher low. Boom. Now we have a higher high and a higher low. So I'm not gonna even go too much into it, but as you can see, just like right here, bro, feel me, we have a low, we have a high, now we have a higher low, higher high. I wish I had a fucking iPad or something, bro, because I gotta type, like I gotta tap to click everything. But yeah, bro, literally it's that simple, bro. This is, I'm sorry, this is 2 H's. It's supposed to be, I don't know what the hell, but yeah, it's all the same, bro. It's all the same. Right? We have a low, we have a low, we have a high, we have a high. Boom. Higher low, higher low, higher high, higher high. It's all, you know what I'm saying? It all goes together, bro. Don't overcomplicate this shit, please, because, you know what I'm saying? People overcomplicate it, and that's what makes it hard, bro. That's what makes it hard whenever you're overcomplicating the situations. But this is what an uptrend will look like, and this is what a downtrend will look like. This is what a downtrend will look like, y'all. But boom, now we got the preview out the way. And another preview, if y'all wasn't watching, is consolidation. Basically, literally right here, price was kind of consolidating. And consolidation is basically when prices just moving side to side, just how it is right here in between this box. Prices moving side to side. It does not have those higher highs and higher lows. It's literally equal highs and almost equal lows. So whenever price is doing that, that's when we want to wait for a price to break out of one of these points and to just to see what it actually wants to do, right? But that is enough for the preview. Now we could actually go into today's topic, which is break of structure, right? This is how we identify when price is switching from that downtrend to an uptrend, or when price is switching from that uptrend to a downtrend. Now we're finna be able to identify how to see that and to know when price is coming for a reversal, right? So as you know, we have a big downtrend right here. So since we have this big ass downtrend right here, we're going to start with a downtrend and what it looks like whenever price is ready to reverse. So right here, we're going to look at these points, right? We're going to look at these points because this is going to show us our our downtrend points. And I actually want to put a line at these points so that I can actually go into depth. All right, boom. So we're just going to focus on in between this box right now. We're going to focus on in between this box. So boom. As y'all know, a green candle and a red candle makes up a high. Red candle and a green candle makes up a low. Like, you know, it's a lot of those. It's a lot of lows and highs throughout the market, throughout the charts. But we want to be able to identify swing lows and swing highs. And as you can see, this is kind of exactly what a swing would look like, right? It will basically be something that you can almost draw like this. It will be a swing, like swing, right? Swing, swing, and then prices, it keeps swinging like this, right? So these will be swing points, and as you can see, it's moving in a downtrend. So this will be a swing, and this will be a swing low, and price just keeps swinging lower and lower, right? Just showing us that it's continuing that downtrend with structure. It's continuing that downtrend with structure because not only is it moving in lower lows and lower highs, it's moving in lower swing lows and lower swing highs, showing us that it was holding that structure, that it actually had real structure whenever it was in a down or uptrend, right? And to give you an example, right here, boom, as you can see, we have a low, and then we have a high, and then we basically have another low, and we have another high. But this is not something we would want to trade because it's choppy. It doesn't have any swing points. Honestly, this is not something that you could just go and, you know, boom, that would be a swing. This would be a little swing. This could be a little swing right here. You know, this will be the type of swings that we will have. Like, price is not giving us real swings. This is not something that we will honestly just want to trade in. It's not trending for real, right? It's not really trending. It's not being clear. Look at the difference between this point and over here, right? You can actually see these swings of the structure. And I really hope that makes sense because I'm not sure, like, I don't know. I don't know, bro. I don't know how to, let me see. I don't know. That just, you know, it's just, I just pray it makes sense for everybody, bro. I pray it makes sense for everybody because it's literally that simple. So I was going into that because price leaves these swing points, right? Price leaves these swing points whenever it's actually moving in an uptrend or a downtrend with structure. And honestly, we only want to hop into trades that have structure. We only want to hop into trades that's actually showing us that it wants to go in this direction. We don't want to hop in trades that leaves us second guessing or, you know, indecisive or whatever, right? And when price is moving with structure, it gives you that confirmation that it's going to continue whatever direction that it's in, just how we're looking at now, right? So I say all this to say that, boom, right? So right here we have this low and we have a high, and we know that we have a lower low and a lower high. But what I want y'all to see is these swing points. Boom, we have a swing right here, and the swing will literally just be the same as the lows and highs, bro. But the thing about these swing points is these certain swing points actually have effect to the market. So as you can see, this will be, I'm going to just say this will be the first swing high right here. This will be that first swing high, and this will be that swing high because we get this high and it's like market literally went downwards. Like market was affected by this high. Market reached this high and then it rejected, right? It's like it literally rejected off of that point right there. So this will be considered that swing point right here, right? This will be that swing point, right? And the same for these lows. Right here will be that swing low. Price bounced off of this low and went back up. And just like these swing highs right here, price came up to this level and then went back down. And I say all this to say because boom, right here, we have a low right here, but this wouldn't just be considered a swing low because it's not really affecting the market. It's not really doing nothing. Nothing bounced off this point and went up. Nothing bounced. You know what I'm saying? It didn't really affect the market, bro. We want to be looking at these points, these swing points that actually affected the market, right? Because we already know there's a million highs and lows all over the charts. But now that we know what highs and lows are, now we only really care about these swing highs and lows whenever we're looking to mark out our charts and looking for structure and stuff like that, right? We only care about the swing points. But like I was just telling y'all, this will be considered a swing low because price literally bounced off this point and went here and then rejected downwards, right? And when price came right here to this low, it didn't really affect it. The market didn't bounce off this point or anything like that. But instead, it skipped that part and it came right here. As y'all can see, boom, will be another swing. Price bounced off this area and it went right here, which will be another swing. Price bounced off this area, rejected to the downside. Boom, another swing. Well, it will honestly be right here. I'm sorry. Under these, like the wicks of those highs and low points will be another swing. Another swing, right? Price is steady rejecting off of these levels or bouncing off of these levels. And that is kind of what you want to see whenever, you know, we looking for these swing lows and swing highs. And still, even with us just marking out the swings and not every single low or high, you can see that, boom, we have a swing, and then we have a lower swing, and it just continues. We have a swing low, then we have a lower swing low. So price is still moving in those lower lows, and lower highs, right? We just marking out the actual points that affect market, the actual points that we are interested in, because we know now that these are key levels. Like, these are strong levels. Why are these strong levels? Because like I told y'all, every time price gets to these swing points, it reject. Every time it gets to these low points, it bounce off just to reject again. So price is having an effect to these levels, right? Price is having an effect to these levels. Not only is that, these are key levels now, right? These are now key levels. Whenever price, we're moving in a downtrend, right? We're moving in a downtrend, lower lows and lower highs. So now that we identify that these are key levels because they are leaving us these swings that we see right here, right? They're leaving an effect to the market. Now that we know this, now we know that these are key levels. That's how you identify key levels, when price is kind of rejecting a point or bouncing off of a point. Those are your key levels, right? But now we know our key levels, and with key levels, they are hard to break. It takes money to break. So whenever price decides to break above or below one of these points, depending on the direction, it's telling us that it's a strong reversal coming, because we seen that every time price comes to these highs, all it does is reject. We seen every time it comes to this high, all it does is reject harder than it did the first time. It comes up and reject. It comes up, reject even lower than it did the first time, right? So we see that at these highs in a downtrend that price is rejecting, right? Price is rejecting these highs in a downtrend. Price is rejecting these highs in a downtrend. So, I could draw it out like this. We'll have literally a swing right here, and then price will, it literally moves like this. Swing, 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 right? And literally under them swing highs and stuff like that, you have these swing lows right there. These are all swing lows, right? These are all swing lows. Price is basically bouncing off that swing low. It comes up just to come back down lower, right? It comes up just to come back down lower, right? Price is rejecting these areas. It doesn't really want to go high. It just comes up just to come lower. It literally comes up so it can go back lower, right? So I'm marking this out to y'all because I want y'all to, I want y'all to really understand. I want y'all to really understand. Like how to identify these reversals or whatever. So boom. Let me just erase all this shit. So boom, we already identified what swings are, right? We already identified what swings would be, right? And it's just whenever price swing up, man. It just, whenever price swing up, have these swings, right? These swings. And even then, what you see, bro, prices moving lower and lower. These lows, prices jumping off at this point and moving lower, right? That is how it would look with these swings. That's how we mark out them key levels. But now enough of that. I'm going so deep into that because you have to understand that to understand the reversal, right? So now we have these swings in a downtrend. A reversal is when price close above the previous high, right? So, again, in a downtrend, just like we're looking at now, and I'm going to actually draw this out because I wanted to make the best sense to y'all. So, right here, we got this little move up. Boom. We got the move down. We got the move up, lower high. Then we got a lower low. Then we got a lower high. Then we got a lower low. Then we got a lower high. Then we got a lower low, right? So this is a downtrend, lower highs and lower lows, right? So in a downtrend, it is classified as a reversal whenever price breaks above that previous swing high, right? So these are swing high, swing high, swing high, swing high. Just how I marked out to you guys. These would be the swing lows right there. The swing lows, right? So in a downtrend, price is classified as a reversal whenever it breaks above that previous high. So, as y'all know, a downtrend is moving in lower lows and lower highs. So, in a downtrend, it is no way that price should be moving in a higher high, right? It is no way if price is continuing to moving down just like this, right? It's moving down in a downtrend, right? The next move would be, if it's continuing its downtrend, the next move would be just how it was right here. It's a lower high. And after this lower high, what we supposed to get? A lower low, right? We supposed to get a lower low, which is supposed to come down right here. This will show us that it's going to continue that downtrend. But instead of doing that, it did this. It made a lower high, right? It made a lower high. So, we're still in a downtrend. We're not thinking nothing of it. But shortly after that lower high, it made a higher low, right? Boom, we have a low right here, and we have a new low. So now price is moving upwards, right? Price is supposed to come downwards, make a lower low, but instead it made a higher low. So this will be that first step of confirmation to think that price is in a reversal, because we know that in a downtrend, price is moving in lower lows and lower highs. So it should only be lower lows. So now I'm just waiting to see, right? Now I'm just waiting to see. This is not the full confirmation that price is reversal, but this is a point you want to acknowledge to know that, it may be time for a reversal, or let me hold back and let me not trade until we know where price is actually going down, because maybe the downtrend is over with, right? So boom, once we got this lower low, that's how we started to think. That's how y'all all should start to think, right? That price is no longer going in this lower lows no more, right? It just made a higher low. So hold on. Let's see what it's going to do next. Boom. In a downtrend, a reversal is when price breaks above that previous swing high, right? So as we already identified, this was that high. Price made a lower high. So this is this previous swing high. This will be this previous swing high that we have, which will be right here, right? This was that swing. You know what I'm saying? These is the highs. This is the highs. These is the swing lows. These are the swing lows. Those are the swing highs, right? In a downtrend, price confirms its reversal whenever it closes above a swing high, right? I got to keep repeating that, so I hope y'all done wrote that shit down, bro. I got to keep repeating that because it's not classified as a true reversal until it does that, right? And this will stop us from hopping in trades early. But we identified that this is our previous swing high, that move up, then move down. Okay, cool, right? This is that previous swing high. Boom. Now, what we want to do is we can put a line at the top of this swing high, because now we know these candles right here, this is our previous high. This is our previous high. So basically, we need a candle to break above this high. In order for it to be a reversal, we need a candle to break above this high, right? And as you can see, we get a candle closure above this high, which is what we want to see. It would have been different, and this is something that I think we went over the last time. I'm not sure we went over this, but when I say to confirm that reversal, price needs to close above that high. Price needs to close above the previous high. This is that previous swing high, right? This is what a real closure would look like. You see, we have a candle and it closed above this line that I drawn out for this high point, right? A lot of the times, and don't get confused with this, but a lot of the times, price will have this swing high, and instead of the candle closing above it, it would just wick above it and then come back down, right? So what does this look like? So boom, we have a swing high, and that swing high give us a high point, right? So, because I want to do it to where I can draw this out for y'all. I want to do it to where I can draw this out for y'all. So, just in case y'all want to, draw it out yourself from your notes. But boom, we're going to do like this. Say we get a high, right? We get a high just as we did right now. And this high, we're going to get a high point. Just like this wick right here, this is the highest point. So this is the high. This is the point where we want to see price break above now. We don't want to see it just break above, the green candle or whatever. We want to see it break above that actual high point that this high made whenever it was making that high, right? We want to see it break above that high point, right? So say in this high, it had a wick just like this, right? Now we want to see a candle closure above this point, just how we have drawn out right here. I really hope this makes sense. I hope my screen not messy to the point where it's confusing people. Let me delete a few things right quick, y'all, because I do not want to confuse y'all. I ain't trying to confuse y'all, man. I'm going to just erase all that. But boom. Boom. Right? We have to have a move up, then a move down for it to be that high. That was an ugly move, bro. I'm not going to lie. Let me just redo that shit. Move up, then move down. Man, why every time I come down, they want to do that? But boom. This will be that high right there, right? This will be that high right there that we have. So we're going to mark out right above that high, because now we're looking for a candle closure above that high. Just how right here we have it marked out. So boom, I'm going into this because a lot of times A lot of times, price will have a candle and it will come up, right? It will open, new candle, it will come up like this, and you would think a lot of people would just enter right now. They're like, oh, it's a reversal, right? It's a reversal, but the candle is still movement. Candle has not closed it. It is still movement. We only trade off candle closure. You only press enter once a candle has closed above your level, right? So just like this, it has to close above that point we was waiting for it to close. It has to close above this point we was waiting for it to close, right? A lot of times, instead of doing this, price would come up, right, and then come back down. It doesn't even close up there. It just comes back down, and it just have a candle like this back to the downside. And what it would do is wick. It will leave a wick above the point where you waiting for a candle break, right? It will leave a wick right here. Bruh, that's crazy. It don't want to put my shit in the middle, y'all. But boom, we got to say it leaves a wick like this, right? The candle wicks, boom. It leaves a wick like this. Instead of closing above this point, how this candle did, it just leaves a wick. Like, do that make sense to y'all? I really hope that makes sense, because that is a very, very important factor right there. Very, very important factor. We only trade off candle closures, right? Right? If this is the high point that we made, and we just said in order to be a reversal, we need price to close above this high point right here, right? We need a candle closure above this point. A candle closure above this point. This is what a candle closure will look like, which is like this. A candle closure above this point. It is above the line, and it clearly closed above this point. This is not what we're looking for right here. We don't want price to just wick above our point, then come back down and close above that point. That is showing us that price is kind of rejecting whichever side that is that we thinking of a reversal in. That is saying that it's playing around, and we rather just wait for price to come back up and close above these levels. Because once price close above these key levels, like I told y'all, these key levels above these highs, those are levels that's hard to break. It takes money to break. So when price actually breaks above these levels, an actual candle close, it's showing us a strong signal in a uptrend or downtrend, wherever it's going. It's showing us that it wants to continue in that direction, right? So as we can see right here, boom. I really hope this shit be making sense to y'all, though. I'm not gonna lie, because I really don't be knowing, like, I be trying to break shit down, but I don't be knowing if I'm just breaking it down the best way possible. But boom, we wanted price to break above our previous high, right? And price broke above this high. That will be when we have a reversal. That will be when we have a reversal. Price was in a downtrend. We had this previous high, which is right here, right? We have our previous low, which is right here. If price wanted to continue that downtrend, price was supposed to come up and then move downwards and come down here, right? But instead, price made a lower high, how it did, and it moved upwards. It moved upwards, and it gave us a candle closure above our previous high. This is showing us that price has closed above this key level. Now we know that it's time for price to go back up, right? It's time for price to go back up, and a lot of the times this would have been a easy trade for us because price broke above our level. Now we know it's in a reversal. Now we could have had we would have put our take profit towards these highs that the downtrend gave us, and this would have been able to cash, right? So this is why we wait for candle closures above these certain levels. We wait for candle closures above these certain levels to show us that it is actually in a uptrend now, right? It's no longer in a downtrend. It is now in an uptrend. And the same goes for downtrends, right? So, the same goes for uptrends. In a uptrend, it is a reversal whenever price closes below the previous swing low, right? So in a uptrend, it is called a reversal whenever price closes below the previous swing low, right? One more time. In a uptrend, it is considered a reversal whenever price closes below the previous swing low, right? So we go break this down for y'all, man. Y'all know we gonna break it down either way. So boom, let's see if it looks clearer on this hourly, and it really doesn't. So we could just stay on this 4. This'll do, right? So this is not the perfect uptrend, bro, but this is enough. This would do for us, because we just gonna use the gapping up, right? So now we identified what a reversal look like in a downtrend. Whenever price breaks above a swing high, we know that it's time for a reversal, right? And we can aim at these highs of that downtrend, right? So in a downtrend, it's the opposite. Everything is the opposite with each other with this shit, man. But boom, now we have an uptrend, right? We have a high, we have a higher high, and we have a higher high, higher high. We have a low, higher low, and then higher low. And then if y'all want, I will mark it out for y'all. I'm gonna just do it like this, move up. So it could be clear. Move down, get a move up, we get a move down, we get a higher move up, and a higher move down. Boom. So this is how an uptrend would look: higher highs and higher lows. So in a uptrend, it is classified as a reversal whenever price closes below a swing low, right? The previous swing low of that uptrend, right? So we just identified that this will be that previous swing low. This is the last point where price bounced off and went upwards, right? These swing points come from the points where market is affecting. When price is affecting, the market is affecting the price, whatever fuck, nigga. But yeah, price comes right here, then it bounce off, right? Price comes here, then it rejects. So this will be our swing high and our swing low or whatever, right? So this is that previous swing low that we had, which is right here. So what we would want to do is, and I'm going to take all these arrows because I don't want to confuse y'all with the arrows. But yes, this is the uptrend right here. This is the swing, and another swing, right? This is a swing and swing. Like you can like, it's obvious when it comes to these swing points of which points actually affect the market. Like the market literally bounced off of right here, then shot up, right? The market literally bounced off of this point, then shot up, right? So these are our swing points, bro. These are our swing points, and the same with these right here. Price came to this level, came down, went up higher, right? So these are our swing points, and yeah, these how you identify them swing levels, right? Price came up, reject off that level just to shoot up back higher. Boom. So like I told you, with these swing points in a uptrend, it is classified as a reversal whenever price closes below the previous swing low. Cause what? In a uptrend, why, Tay? In a uptrend, price is moving higher. I did just draw this out, but I'm sorry, I forgot to do the example for y'all. Cause I want everything to make sense to y'all, bro. Boom, uptrend, higher lows. After a higher low, what you get? A higher high. Higher high, what you get? A higher low, right? So this is how an uptrend move: higher highs and higher lows. So after this, we should have got a higher high, just as we did. But after that, we should have got a higher low. And where is that higher low to be found? Right? It should have been somewhere right here, right? To consider a higher low to be higher than this point and still hold structure. And after that, we were supposed to get a higher high, and price was supposed to continue like this, and we would got another higher low. This is how price will have continued if it wanted to hold that structure to the upside. But as you can see, we got a reversal and price broke structure to the downside, right? So break of structure. This all I've been talking about, y'all. So y'all not confused because I didn't even make that clear. I'm not gonna lie. So this is break of structure. This is what break of structure look like. BOS. Break of structure, right? All this is break of structure, right? The structure is in a uptrend. Price continues this uptrend. But instead of getting a higher high, you know what I'm saying? Instead of giving us not even a higher high, because we got this high. Instead of giving us a higher low, because we got a low, so now we needed a higher low around right here. But instead of giving us a higher low, we got a lower low. Price came all the way to this level, right? Break of structure. The structure was an uptrend. It broke the structure. Now it took over. It got its own structure going on to the downside. You know what I'm saying? So just think about it like that. Break of structure, BOS. Price was in an uptrend. It broke structure to the downside. The same as the one that I showed y'all. Price was in a downtrend. It broke structure to the upside, right? And as y'all can see, price moves in uptrends and downtrends throughout the time. But these trends do not last forever. That's why when we get to the point where y'all are starting to trade, bro, in these trends, you get in and get out, bro. You get in and get out. Don't try to be overly greedy, bro, because trends don't last forever, and you don't know when it's going to end. So get in and get out. Get your money. Get out, bro. Don't be greedy. But, boom. We have, this is a break of structure. Price is moving upwards, and then price move down, right? So, I would consider the break of structure whenever price came past this level, simply because this is that last swing low for me. This is the last point that price jumped off of, right? Don't get me wrong. At these points right here, it's a low, right? We got a red candle, then a green candle. But look, at this low, what is it doing? It's not affecting anything. It's not moving upwards from this low. It's not moving. It's not effective, bro. It didn't affect anything. And that's what I'm trying to show y'all when it comes to these swing points. The swing points are these points that are effective. Like, literally in this downtrend, you can see price come up here, then reject, right? Price come up here, then bounce off. Price come down here, then bounce off. Price comes up here, then rejects. So these are our swing points. So this is why I'm going to consider this as the previous swing low of this uptrend. This is going to be considered the previous swing low, right? Because this is the last point that price was affected from. This is the last point where, price came down here, then it went higher than the last high, right? So that's going to be my swing point. Some people would just classify, this is their last swing. They would say whenever they get a candle closure below this low, then, they would take their trade. But me, I like to be on the safe side, all the way on the safe side, bro, because the more confirmation, the easier everything is. Like, when it's like you want to set it up, bro, to where your trades is almost guaranteedly going to hit. You know what I'm saying? Like, literally, if your trades don't hit, it's because you got wicked out or something like that. But other than the structure, bro, when it comes to the structure, bro, we want to be trading on shit that it's like literally, bro, like it's almost guaranteed it's going to hit, bro, because we trading off of market structure, and market is going to move how it moves. So that's what we want to be. That's what we want to go off of, bro. That's what we want to go off of, and we want to be on the safer side to the situation. Like, trading is not going nowhere. We don't have to rush it, and that's a lot of people think. A lot of people rush the game, and they try to hop in early and catch fast trades. But it's like you have to be patient if you want to get those good quality trades. And you got to think about it like this, bro. You know what I'm saying? Working these jobs, bro, we'll wait the whole week to get our paychecks, bro. So when you get into this trading game, don't get greedy and you know what I'm saying? Don't switch up that mindset, bro. Don't switch up that mindset. Be willing to wait for your money to come to you, because when you start chasing and shit like that, the shit start running away from your ass. So be willing to wait for your money to come to you. Be willing to wait for all your confluence to happen, all your confirmation to happen. And then when you see that everything has happened the way that you planned it out to happen, have confidence that your trade is going to play through, because all of the steps played a part. All of the steps is adding up now. So now it's time to execute. When it's time for execution, don't be scared. And right now we are on day 3. So the shit that I just said right now has nothing to do with any of y'all, probably. I'm not sure if any of y'all trading right now, but you know, y'all not even trading right now, but just remember the words that I said, bro. You know what I'm saying? We wanna make it as guaranteed as possible. We don't come to this shit for greed, bro. Don't be greedy, because greed is the quickest way to kill accounts, to blow accounts. And trust me, I know I've blown multiple accounts, bro. Multiple accounts. So, yeah. But enough of that bullshit. Boom. In a uptrend, a reversal is confirmed whenever it closes below the previous swing low. I had to say that one more time, y'all. My bad. But boom. If you've been paying attention, you can already say what, like, you know, when did it become a breaking structure? When did price actually break structure to the downside, right? So, like I told y'all, this is the previous swing low. So what we want to do is we're going to leave a line right here, because we want price to break below this point. And as you can see, we get a break below this point with this red candle right here. Price broke below. But, and it's another thing, whenever we looking for a price to break below or above our points, we want to look for a break with momentum, bro. Like, we want it to actually break above our point. Like, we don't want it to play with it. Like, you see, it low-key didn't want to even break above this bitch. Like, price literally came all the way down here just to close right here, like right under the line, right? And it had the opportunity to close above this level. So I'm not going to say that this is not a good trade to take, but we want to trade off of momentum. Like I told y'all, we want this shit to be the most guaranteed as possible, right? So we want price to actually break below these levels. And right now we are on a 4-hour time frame. So if it looks like this and we're kind of skeptical, all you want to do is go down to the 1-hour time frame, right? And this will be that level that it broke. And you want to see if price is actually struggling to break this point, or what does it look like? And as you can see right here, it was just a lot of wicking and stuff like that. Like, price was kind of failing to break below this level. Like, if we get close, we can see it took a while for price to actually break above this level, you know, with like actual space in between. At first, it was just riding along this level, right? So we got to be careful for that, because you see when price broke out, it barely broke out, and then it just literally started consolidating. So a lot of people would have probably got out of their trades. A lot of people probably would have had their stop loss above this point and probably would have got stopped out, because we're not trading with momentum. Whenever we're looking for price to break above these levels, we wanted to actually break that bit. Like, you know what I'm saying? We wanted to come down, bro. Like, it would have been good for price to close down where it left this wicket. That would be almost guaranteed. Oh, yeah. It has momentum. It's moving fast. It's a strong candle that broke our key level. You want strong candles to break your key level to show you that, oh, yeah, sellers are in control now, right? So, yeah, but enough of that. Even if we didn't go off of this candle broke below this point, right? This candle broke below our level. It broke below this swing level, and that is what we would have wanted to see. And after price broke above, we would probably want to take a trade, put our stops above these highs, and we would have probably aimed for, you know, this liquidity down here, probably these highs, because this is where the money sits above these highs and under these lows, which we will go into in the next video, which is the liquidity, right? We will put our take profit at these high points right here, right? Right at these high points, right? And if it was the opposite, these low points would be money right here at these high points. We could even put it right here. Boom, right here at this high. Money sitting right there. And as you can see, price cashed, right? Price cashed. So, yeah, this is how, you know what I'm saying? This is how you identify breaker structure in the market. This is how you identify breaker structure when price breaks structure to the downside and when price breaks structure to the upside, right? So in a downtrend, it is break of structure. All right, let me type that shit, obviously. All right, boom. In a downtrend, it's a break of structure when price closes. And a downtrend is break of structure when price closes above a previous swing high. Let me make this shit small. I can already see a big head in the back. Boom. And a downtrend is a break of structure when price closes above a previous swing high. In a downtrend, it is a break of structure when price closes above. This is swing high. Price closes above. This is a break of structure. Right? In a downtrend, in a trend, it is break of structure when price closes below below that previous swing low, right? Because we do it like this because in an uptrend, it moves in higher highs and higher lows. A downtrend, it moves in lower lows and lower highs. So if we moving upwards in an uptrend and then we see that price closes below a low, we know that, all right, it's moving in lower lows now, which is what? A downtrend. In a downtrend, price is moving in lower highs and lower lows. So whenever price starts moving in a higher high, we like, hold on, this is what a uptrend does, right? So that's what we're looking for, man. That is just, you know what I'm saying? That's what we're looking for. In an uptrend, it is a break of structure when price closes below that previous swing low. Just like this, man. It closed above this swing low, just like this, man. And with these swing highs, just like this, right? So with both of these plays, just off of you knowing market structure and about break of structure, you would have been able to cash on both of these plays. Mind you, we are on the high time frame, which is the 4-hour time frame. So when price breaks these levels, it's literally almost guaranteed that price is going to continue in a way that it's saying it's going to go when it breaks above these levels, right? But yeah, I think that may be it for the day. I don't want to overcomplicate it. Like I told y'all, we're going to get into liquidity in our next video. I feel like this video is long enough, but I can show y'all because I did show y'all how it would look for in the highs. So when we're looking for those candle closures, price breaking above. No, so in the uptrend, we want price to break below this swing low, right? So what that looks like, we want a candle closure below this point, right? So say we have a low, boom, we have a low right here in that uptrend. Price has a wick. We're going to say a wick. Boom. In this low, a wick right here. We're going to say a wick right there, right? Boom. Now, what we saying, price needs to close below that previous swing low, right? So we will put our line right here. Now we want to see price close below this point, right? When we say we want to see price close below this point, we want to get a full candle closure below this point. A full candle closure should look something like this, right? It doesn't matter if it's a red candle or green candle. If a full candle closure closes below your point, it's signaling to you that it wants to reverse and change the structure, right? So this will be that low point, that swing low right here. we want price to actually close below this point. And as you can see, it didn't really close, but price did eventually close below this point. We did not want it to just look like this. We don't want a candle to just, a new candle to form. It comes right here, but it doesn't even, boom, it stays under this line, right? It stays under this line, but price came above, price came under this level. It just didn't close, right? That's what you want to watch out for. And I don't know why my lines keep being squiggly, bro, but this is what you want to watch out for whenever price leaves a wick below that level, but it doesn't close. Because bro, y'all just gotta understand market structure. Market is gonna do what the fuck it wants to do. You know what I'm saying? If it wants to have a reversal, it will close above this level. So just wait for that, bro. And if it does not close above this level, just don't trade, bro. Protect your capital. That's the whole thing. Protect your money, bro. Don't just be throwing your shit out there. You know what I'm saying? So we want to see a candle closure like this. And even like I told y'all, we trade off of momentum. So we want to see a good candle closure. We don't want to just see a candle closure. We don't want to see no shit like this, bro. We don't really want to see no shit like this, bro. We don't really want to see no shit like this, bro. You know what I'm saying? Like this little ass candle closure. We want some closure with momentum. Like, yeah, show me you want to close above that bit. You know what I'm saying? This right here is just, I don't know. Be skeptical, bro. Don't be scared to be skeptical, bro. We want to see real candle closures, not wicks, not candles with low momentum. Real candle closures, real momentum, man. That's showing us now that prices want to continue that downtrend, right? Now we know that, it's a great possibility price didn't close above these previous lows of an uptrend, because at this point, this is what price was doing, right? Price was moving in these high. I'm trying to do it where it'll like make where to make price, boom, a lower one, basically, boom, boom, something like this, right? So I ain't gonna lie, something like this. So we had a high, a higher high, and a higher high. We got a low and a higher low and a higher low, right? So price is moving in an uptrend, but this is that previous swing low, right? Candle closed below that previous swing low, showing us now whenever we get this candle closure below this swing low, now it's like, okay, boom, we know that price wants to continue that downtrend now, right? Now is the best possibility is going to continue that downtrend, right? When it does this right here, bro, when it just wicks a little bit, now it's showing us that it's just grabbing liquidity. It's grabbing a lot of money. We're going to talk about liquidity tomorrow, but it's grabbing a lot of money at these key levels just to come back up higher, just to start that uptrend all over again. It doesn't even come this way. So that's why we want to wait for a candle closure below or above these levels. That is so important. Candle closures are so important. You want to see a candle closure below your levels. Whatever lines you have marked out on your fucking chart, bro, let the candle close above that line or below that line, bro. You have that line marked out for a reason. Let the candle close below that line, bro. But yeah, that is really it. I ain't gonna lie. That is really it. You know what I'm saying? That's really it. Let me make sure. I don't know. That shit. We gonna just end it off there. Tomorrow, I'ma watch these videos and stuff like that. So tomorrow I'll be able to see if we need to go over more shit in the next video. But for now, we just gonna end it right here. I'm not even sure how long this video is, but yeah, continue to watch this little trading 101, bro. I'm just continue to break down. The basics of trading. If you want to join a community where you able to chat with other people, just comment below and I'll make sure I contact you and stuff like that, or follow my social media apps. And then just DM me on one of my pages and I'll send you the information to get connected with our trading community, our free trading community that we have, where we just have a lot of people together and we just, share our trades, share our opinions, and, just uplift each other. we have a free community like that. And I also have a Telegram where I just share all of my plays. But yeah, if you're interested and you're actually taking trading seriously, bro, just contact me, bro, and I'll connect you with all the stuff that I'm connected with. But aside from that, man, just continue to watch this trading 101 course that I'm doing with y'all. I plan on doing like 10 or 11 videos because that's honestly all you really need if you're going into depth with these certain things. And then, you know what I'm saying, y'all can take off from there. But yeah, today was based off of breakup structure. That is basically what breakup structure is. Tomorrow, we're going to go into liquidity and how to watch out for like news and stuff like that. To how to watch out for the things that actually affect the market other than the shit that's actually on your screen. You know what I'm saying? Like, I know y'all see shit like that whenever they say Trump talk and Trump or somebody talking shit like that and the stock go up 50 points. Like, you know what I'm saying? Stuff like that. So I'll let y'all know how y'all can watch out for news and all those good things. But y'all continue to watch these videos, subscribe and stuff like that. Comment stuff that I need to slow down on or stuff that I should explain better. Like, just give me feedback so that I'm able to help y'all whenever I make these videos and stuff like that. Even if it's just me making more notes, drawing out more notes so that y'all have something to write in y'all notebooks. Because notes are very important. You want something that you're able to look back at. So, y'all just give me feedback and stuff like that. But, you know what I'm saying? I appreciate y'all. And, yeah, y'all have a good rest of y'all day, man.